Fast and reckless look identical from the outside. The same aggressive position sizing, the same quick decisions, the same rapid account movement. Yet one builds wealth while the other destroys it. The difference is not in what you do, it's in what you are not doing. The traders who scale tiny accounts the fastest are not taking more risks. They are avoiding three specific traps that slow traders trigger without even realizing it. And here's the twist. Everything you've been taught about being careful with a small account is actually the very thing keeping it small. I'm about to show you how to move fast without being reckless and why that distinction changes everything. Let me be direct with you from the start. You are stuck in a psychological trap. It has nothing to do with how much capital you have, and everything to do with how you think about your small account. You've been told to preserve capital, risk only 1%. Be patient. That's great advice. Beautiful advice, actually. If you have $100,000, if you have $50,000, if you already have wealth and you are trying to protect it. But you don't have that. You have $2,000, maybe $5,000, maybe $5,000, maybe $800, and you're trying to trade that tiny account like it's $200,000. You are operating from a framework designed for wealth preservation, when what you actually need is wealth creation. Those are completely different games with completely different rules. The pain isn't that you don't know what to do. You've read the books, you've watched the videos, you understand risk management, position, sizing, all of it. The pain is that you're applying rules written for someone else's situation, someone who already made it, someone protecting what they have instead of building what they don't. Every single day you follow that advice. You stay small, you stay stuck. Not because you're doing something wrong, but because you're playing the wrong game entirely. What you're about to receive is relief from the paralysis. The three strategies I'm going to share are not about taking crazy risks or gambling. They're not about hoping and praying. They're about understanding what tiny accounts can do, that big accounts can't, and exploiting that edge intelligently. You're going to see why conventional risk management advice is built for people who already have money, not people trying to make it. You're going to understand the psychological shift from protection mode to creation mode. And you're going to walk away with three specific actionable approaches that let you scale fast without the stomach-churning terror of reckless gambling. Here's the myth we're destroying today. That fast growth and intelligent trading are opposites. That you must choose between being smart and being aggressive. That is a false choice. Speed and intelligence can coexist, but only if you understand which rules apply to your situation and which were written for someone else's game. This isn't about ignoring risk. It's about understanding that risk tolerance, risk capacity, and risk necessity are three completely different things. Tiny accounts operate in a dimension where all three can align in your favor, if you know how to see it. Let me tell you a story. Someone started with $800, not $8,000, not even $1,000, just $800. Most traders would look at that and think, that's not even worth trading. I'll wait until I have real capital. But this trader understood something crucial. The $800 wasn't the constraint. His psychology was the constraint. His beliefs about what was possible. His fear of losing what little he had. That was the real limitation. He made a decision. He said, I'm going to treat this as training capital, not trading capital. Not trading capital. He gave himself 6 months and one goal, not to turn $800 into $10,000, not to get rich, but to prove he could execute three specific setups flawlessly under real pressure, with real money and real consequences. He traded micro contracts. He risked what felt like real money to him, $50, $80 per trade. And he lost a lot. Within 2 months, he was down to $400. Half the account gone. Most traders would quit there. They would say, fee, $800 wasn't enough. But something else happened. He learned faster in those 2 months than most traders learn in 2 years. Why? Because he had permission to be wrong. He wasn't protecting a fortune. He wasn't guarding his life savings. He was building competence. Every loss taught him something. Every mistake became data. He wasn't emotionally destroyed by being wrong because being wrong was part of the plan. The plan wasn't to never lose. The plan was to learn to trade under fire. By month 4, something clicked. His execution became clean. His emotions stabilized, not because he won every trade, but because he trained himself to execute regardless of outcome. He rebuilt the account to $800, then to $1,200. By month 6, he had $2,100, not life-changing money, not quit your job money, but life-changing psychology. He proved to himself that he could execute under pressure. He could manage his emotions. He could follow a plan with money on the line. With that proof, he added another $3,000 of saved capital. This time, he wasn't a beginner protecting savings. He wasn't scared. He wasn't tentative. He was a competent trader deploying capital. Within a year, he was trading a $25,000 account. The $800 was never the constraint. His belief about what $800 meant, that was the constraint. His belief that he needed to protect it instead of use it. That's what kept him stuck. Think about it this way. 2 people are stranded on an island. One finds a book of matches, 10 total. The other finds flint and steel. The person with matches is terrified of wasting them. They won't light a fire to cook food because they might need it later. They won't signal for help because they only have 10 chances. They conserve so carefully that they eventually die with 8 matches left. They died protecting resources. The person with flint and steel fails 50 times trying to start a fire. They look incompetent. They waste effort. But on the 51st attempt, they create fire. And once they know how to make fire, they have it forever. The knowledge is permanent. The skill is transferable. They learn the principle, not just the tactic. Most traders with small accounts behave like the person with matches. They are so afraid of wasting capital that they never actually learn to trade. They take one setup per week because they're being careful. They risk so little that wins and losses feel meaningless. There's no emotional weight, no learning, no growth. They conserve, protect, guard, and learn nothing. They die with 8 matches left. Small accounts are not matches. They are flint and steel. They are training grounds. If you never strike them, you never learn to make fire. The paradox is this. The faster you are willing to use a small account for legitimate learning, the faster you build the skill to never waste another dollar again. But you must be willing to strike the flint. You must be willing to look incompetent for a while. You must be willing to fail in service of learning instead of succeeding at protecting nothing. So if small accounts aren't about conservation, what are they about? What are these 3 strategies that let you scale fast without being reckless? Strategy 1, asymmetric setups. Over consistency. With a tiny account, stop trying to be consistent. Stop trying to win 60% of the time. Stop optimizing for STI. ADDI reliable returns. Instead, hunt asymmetric setups. Trades where you risk $1 to make 5, 10, even 20. You only need to be right 20% of the time. You can be wrong 8 times out of 10 and still be massively profitable if your winners are big enough. Why does this matter? Because with a small account, consistency is expensive. Every trade costs commissions, spreads, emotional energy, time. If you take 100 trades to make $500, you've spent enormous energy for minimal gain. But if you take 10 trades and one pays 10 to 1, you make the same $500 with 90% less effort and 90% less exposure. You use capital efficiently. You use emotional energy efficiently. You leverage math instead of fighting it. The psychological shift is this. You must become comfortable being wrong most of the time. Traders are wired to seek validation through win rate. We want to be right. We check win rate like it's a report card. If it drops below 50%, we feel like failures. But validation doesn't grow accounts. Math does. 1 10-to-1 winner erases 9 losers and you're still profitable. That's not luck. That's structure. That's asymmetric risk-reward. But here's the trap. Many traders say they hunt asymmetric setups, yet they exit at 2-to-1 or 3-to-1 because they can't tolerate holding through discomfort. They see 3 times risk and grab profits out of fear. It will reverse. They cannot emotionally handle watching a winner fluctuate. So they cut it early, over and over, and they never capture the outsized moves that make asymmetry powerful. Real asymmetric trading means holding through the urge to take profits early. It means being wrong 7, 8, 9 times in a row and still trusting the math. It means enduring drawdowns while waiting for the big payoff without panicking, without changing strategy, without abandoning the plan right before it works. That is staint. Ratchy one asymmetric setups over consistency. You are hunting big game, not collecting small game. And big game hunting requires patience, persistence, and emotional tolerance. Strategy 2, concentration over diversification. This challenges conventional wisdom. Stop diversification, at least in the beginning. Diversification is excellent advice when you have significant capital, but with a tiny account, diversification spreads you too thin. If you have $2,000 and trade 5 setups across 3 markets, you dilute both your learning and your capital. Even when you're right, profits are minimal. You become a generalist in a game that rewards specialists. Instead, concentrate. Choose one setup, one market, one time frame, master it. Trade it 50 times, 100 times. Learn every nuance, every failure mode, every context where it works and where it fails. Concentration compounds. The more you see the same setup, the faster you recognize quality versus traps. Execution becomes faster because you already know what to do. Confidence grows because you've seen the pattern repeatedly. Your edge compounds through pattern recognition instead of starting from zero each trade. With a small account, you cannot afford to be a generalist. You don't have the capital to trade everything. You don't have the time to master everything. You must specialize. Know one thing better than most traders know anything. The specialization is how you generate the asymmetric returns from strategy 1. Because when you deeply understand your setup, you know which occurrences are high probability and high reward. You know when to strike with conviction and when to step aside. Even though it may appear appealing at first glance, most traders fear concentration because they believe it will cause them to miss opportunities. They notice an excellent setup in a market they don't normally trade, and immediately experience FOMO, the fear of missing out. But every opportunity you pursue outside your specialty pulls you away from mastering your core strength. It drains your learning. It's a signal to yourself that you don't truly trust your edge, so you feel compelled to search for advantages everywhere. That mindset is rooted in scarcity. An abundance mindset says, I have one edge I trust completely, and I will patiently wait for it to show up. When it does, I will execute with total conviction. Strategy 3, velocity over volume. This principle is widely misunderstood. Trade less, but act faster and more decisively when you do trade. Most small account traders fall into one of two traps. They either overtrade, forcing setups because they're desperate to grow, or they undertrade, being so cautious that they place one trade a month and then wonder why nothing changes. Both approaches miss the point. What you're aiming for is velocity, the capacity to fully and rapidly capitalize when a genuine opportunity appears and then remain inactive the rest of the time. This demands a complete shift in how you define active trading. It doesn't mean constantly being in a position. It doesn't mean taking trades every single day. It means being prepared to act the moment conditions align and doing absolutely nothing when they don't. Picture a cheetah. It doesn't chase every creature it sees. It observes. It waits. It may remain still for hours, even days, conserving energy. But when the ideal target presents itself and the conditions are perfect, it bursts into action with absolute commitment. It doesn't hesitate. It doesn't second guess. It doesn't ease in cautiously. It attacks with everything it has. That's velocity. Most traders behave like house cats. They're constantly busy, batting at everything, curious about everything, yet never truly committing with force. They jump in and UTF, tough trades, scratching at the market, generating commissions and emotional fatigue, without ever truly capitalizing on something meaningful. You might place only one trade this month, but when your setup appears, you don't hesitate. You don't convince yourself to wait for another chance. You don't scale in with half-hearted conviction. You strike decisively within your risk limits. You commit fully to that single moment your preparation has been leading up to. This is how small accounts grow quickly. Not through constant activity, but through decisive action when it truly counts. Not by doing more, but by doing exactly the right thing at precisely the right time, and nothing the rest of the time. It's about conserving energy. It's about understanding that most market moments are insignificant, but a few are incredibly important. Your role is to be ready for those moments and invisible during the rest. These 3 strategies are not isolated ideas. They form a system. They function together. Asymmetric setups provide the math. They establish a structure where you can be wrong most of the time and still come out ahead. Concentration builds your edge. It sharpens pattern recognition and strengthens your confidence so you can identify which setups in your specialty truly carry high probability. Velocity determines timing. It instills the patience to wait for ideal moments and the conviction to act decisively when they arrive. Combined, they create a structure that allows you to scale quickly because you're not wasting effort on trades that don't matter. You're not spreading your learning thin across countless setups. You're not sitting idle when real opportunity shows up. This is how you move from 1,000 to 10,000 in months rather than years, not by gambling, not by hoping for luck, but through intelligent aggression. Focused on the few moments that genuinely move accounts. Now, I know what you're thinking. It sounds compelling in theory, but how do you actually apply it? What does this look like on Monday morning when you're staring at your charts? Here are the practical steps. Practice 1, the single setup commitment. Right now, before anything else, select one setup, not five. Not five, not three, one. Write down exactly how it looks. Define the market context. Specify the entry trigger. Identify where your stop goes. Determine your target. And it must offer at least a 5 to 1 risk-reward ratio. Commit to trading only this setup for the next 60 days. Ignore every other pattern and opportunity you see. Let them pass. This isn't about missing out. It's about building focused expertise. It may feel restrictive. It may seem like you're narrowing your vision. But after 60 days, you'll understand this one setup better than 95% of traders understand anything. You'll detect variations others overlook. You'll know when it's authentic and when it's a trap. That understanding becomes your edge. That's what grows your account, not shallow knowledge across many things. Before entering any trade, score your conviction from 1 to 10. If it's below 8, don't trade. Simple rule. With velocity, you're not aiming to take every borderline acceptable setup. You're not trying to stay busy. You're waiting for trades that feel clear and aligned, where every criterion fits perfectly, where your setup appears in its purest, highest probability form. A conviction level 6 trade might succeed. It might even make money. But it's not the kind of trade that builds an account. It's not worth your emotional investment or capital risk. A conviction 9 or 10 trade is where you deploy full position size within your risk boundaries. That's where you commit completely. This habit enforces selectivity. It trains you to wait for genuine quality and to act decisively when you see it. It removes the mediocre middle ground where most traders lose time and energy. Practice 3, the loss acceptance ritual, after every losing trade, and you will experience many if you're applying this properly. Immediately write one sentence. That loss brought me closer to my winner. With asymmetric trading, losses are not failures. They are not proof that you're doing something wrong. They are the price of finding the major winner. They are expected, they are normal, they are built into the process. You must reshape your emotional reaction to losses. If you're targeting 10 to 1 setups, you'll be wrong roughly 80% of the time. Those losses should feel neutral, even welcome, because they're moving you through the statistical distribution toward the inevitable winner. This ritual interrupts the shame spiral that causes traders to abandon asymmetric setups just before they pay off. It keeps you mentally in the game, so you're still present when the math works in your favor. And the math will work if you remain in the game long enough. Most traders quit 3 losses before the winning trade arrives. Those are your 3 strategies. Asymmetric setups, concentration, velocity, not gambles, not shortcuts, not wishful thinking. Intelligent frameworks built specifically for the limitations and advantages of a small account. Let's bring this together. You came here believing you needed to grow your small account carefully, slowly, and conservatively. What you've seen is that safety and speed are not opposites when you understand the game you're playing. A small account is not a flawed, large account. It's not a weakness you must overcome. It's a different tool with different rules and unique opportunities. Strategy 1, asymmetric setups, frees you from the trap of needy, NG to be right constantly. You can be wrong 80% of the time, and still grow quickly if your winners are large enough. Strategy 2, concentration, frees you from the illusion that you must trade everything and understand everything. You need to master one thing better than anyone else. Strategy 3. Velocity frees you from the false dilemma between overtrading and undertrading. You wait patiently, then act with conviction. These are not hacks. They are not shortcuts. They are structured approaches aligned with the distinct advantages of small accounts. Freedom from external pressure. No audience watching. No judgment. No judgment. The ability to be psychologically aggressive without risking capital you cannot afford to lose. The ability to learn quickly because every trade carries meaningful weight. It's real. It matters. You are not numb to $100 swings when your account is $800. When managed properly, that emotional intensity speeds up learning. You are not limited because your account is small. You are simply configured differently. And if you recognize that difference, if you embrace it rather than resent it, you can leverage it. You can progress faster than traders with large accounts because you're not safeguarding a fortune. You can learn more rapidly because consequences are immediate. You can take intelligent risks because you understand that the danger of staying small forever is greater than the risk of losing a small account while genuinely learning. Here is what I want you to remember. Write this down. My small account is not a handicap I need to overcome. It is a training ground I need to leverage. I am not here to preserve what I have. I am here to build what I don't. I don't need to be right most of the time. I need to be positioned correctly when it matters. I am not a guardian of capital. I am a creator of competence. And competence, once built, creates capital. Forever. That is the reframe. That is the mental shift that allows you to move quickly without recklessness. You are not protecting matches. You are learning how to create fire. Once you know how to create fire, once the skill is built, once you have proven you can execute under pressure, you will never be cold again. Skill is permanent. Knowledge transfers. Psychology is the true asset, not your account balance. If this resonated differently from every other small account video you've seen, if something shifted in how you view your situation, share it in the comments. What single setup will you concentrate on? What belief about small accounts are you ready to let go of? Which match are you finally ready to strike? Your story matters. Your path matters. When you share it, you help someone who is stuck where you were moments ago. You give them permission to see things differently. If you want more genuine psychology, real strategy, real reframes that transform how you view trading, subscribe. Not because I need the numbers, but because you need consistent reminders. This content exists for one purpose: to help you recognize possibilities you didn't realize were there. To show you that the constraints you believe you have may actually be advantages you haven't learned to use yet. I'll continue showing up with each video offering a new perspective. And perhaps one of those perspectives will be the one that changes everything for you. You don't need a large account to become a great trader. You need a small account and the discipline to use it properly. You already possess one of those. Now go build the other